Today's episode is brought to you by Aeon's Creative Technology, the new generation South African venture builder created by former Ozo co-founder and respected tech entrepreneur Mitchin Adams. Now, Aeon's is not an incubator or traditional VC. Rather, they identify, support, and co-invest in innovative startups who can grow aggressively and create sustainable jobs. They also partner with corporates to source and accelerate startups to fill respective gaps in the corporate's value and supply chains, securing 58 million rand from Telkom Future Makers earlier this year to do exactly that. And to top it all off, Aeon's has created a pioneering platform known as the Aeon's Exchange, enabling everyday South Africans to invest in high-growth ventures that are supported by their programs. Visit Aeons, that's AIONS.co.za to learn more. Welcome to the Startup Club podcast, where we share the journeys of invention, failure, resilience, and triumph of some of South Africa's foremost tech startup founders and investors. I'm Mathew, founder of Startup Club ZA, and on the show today, Thandeka Xaba, co-founder and managing partner at Digital Africa Ventures, one of South Africa's first black female-founded venture capital funds, passionate about supporting underrepresented African founders that have the potential to make a significant impact on the continent.
I mean, that environment, actually getting goosebumps thinking about it, that environment is like, it's just so hard to describe. It's like continuously just being surrounded by people your age from all over South Africa who look like you, who are so confident, so excellent in the things they do. They're such pioneers. They're not scared of, going against the grain, and that, you kind of exist in that environment.
It's fair to say that since its early inception in the 1960s, venture capital, like most industries, has been largely male-dominated, both on the investment and recipient side of the table. In today's global fundraising landscape, women make up less than 10% of global VC and private equity workforces, and female-led startups receive less than 3% of venture capital dollars. Now in Africa, the numbers are slightly improved, with 21% of last year's venture-backed businesses having at least a female co-founder. But the reality remains that women are notoriously underrepresented in the tech ecosystem. Whilst the industry comes to terms with the root of that issue, in light of those investment numbers, it might come as a surprise to learn that there is a growing female contingent among Africa-based VCs, with 48% of active funds having at least one female founder or partner involved, this according to Disrupt Africa. And with growing data in support of the added value created by diverse teams, it could be that the industry is starting to realize the importance of building with the right foundations. Regardless, it remains extremely difficult to break into venture capital. So when Thandeka Xaba decided to launch Digital Africa Ventures in 2019, she was knowingly disrupting the status quo as one of South Africa's first black female-led venture funds. But as we'll hear in today's episode, despite the challenges, the opportunity and potential have never been more exciting. Since founding the fund with partner Nonku Komanyane, DAV has attracted anchor capital from the country's leading fund of funds, made a series of investments from logistics to marketplaces, and is now raising Fund 2 to double down on their thesis of backing high-growth, underrepresented founders across the continent. But of course, it didn't start there. Thandeka Xaba was born and raised as one of three siblings between South Africa and Swaziland in the 1990s. Her mom was a teacher turned CA and her dad was an engineer turned farmer. Thandeka's upbringing can best be described as one filled with curiosity.
Yeah, I was kind of like one of those kids who I think did what I needed to do. So school, got the grades, but I think was always just exploring and curious about other things outside of school. So for instance, when I found out that, you could take your own subjects in school, one of my really good friends and I said like, cool, we love dancing and we're going to introduce dance as a subject to school because this is what we love doing. So I think I was kind of like, I knew there were rules, but I always wanted to kind of explore what life was outside of those rules. And I think what was quite helpful was that my parents they acted more as like sounding boards than instructors, which I think is quite a huge risk when you have young kids because, you know, anything can happen. But they never really kind of insisted that, you know, we need to do certain things or take certain subjects. They were always just kind of like, yeah, you know, do what you've got to do. And I think I was really lucky to have a great example in my older brother. So I kind of had a sense of, you know, what courage looked like, what taking risks looked like. And always kind of an emotional buffer in the sense that I knew my family wouldn't be hard on me if I did something wrong or if I failed in trying something new. So yeah, I had a lot of kind of like friends in school who would go on these journeys of, you know, trying weird things with me. Like one of the first businesses that I started in Vieta Park, Centurion, if anyone knows where that is, was a gifting a cards business. So we basically realized that, you know, when we went to our local CNA, there were like very few options in terms of what people were looking for. And so we started this business where we would personalize gift cards and like make them really pretty and sell those to people to use for different functions. And yeah, I kind of did other weird things like rent out my PlayStation from time to time. But I really enjoyed the process of seeing an opportunity where, you know, people could enjoy something that you created and that it made a difference. Like if you compared the before and after, whatever the thing is that you did or made, it kind of added value to their lives. And I think in a way I've kind of been chasing that feeling for till this day, actually. Yeah.
You know, it's feeding the curiosity, which I think make great entrepreneurs, great founders, and great problem solvers, right? And it does sound like you were that way inclined as a kid. When you were starting these side hustles, these businesses, how old were you?
The card one, I was still in primary school.
Amazing.
I think I was maybe 10.
Okay.
And then the PlayStation one was in grade 11, I think.
Okay.
And then I did a foot spa one when I was like even younger, like I think grade 2. So yeah.
Now you end up doing high school at Sutherland High. And tell me, you know, what kind of student were you? Were you studious? Were you always someone pushing for good grades? Was it more balance, have a good time whilst going to school? What was your kind of outlook on life then?
So I think I cared about academics, that's for sure. And I, you know, once I started doing well, I started, you know, feeling like, okay, well, how can I do better? And so I think I spent a lot of time in kind of like investing in having good grades, just because that was almost like a form of validation for me. And then I think that platform and being recognized for my academic achievements kind of opened up a lot of, I got to take a lot more risks growing up. So, yeah, I love sports. I love culture. I was very much into poetry and dance growing up. I played netball, did athletics. I think I was just, I think I wanted to taste all of life growing up. Yeah, curious.
And tell me, amidst all of that curiosity, was there something that you wanted to be? You know, some kids want to be a fireman, some kids want to be a doctor. Was there something in mind that you were like at the end of the schooling thing, like this is absolutely it?
No, actually.
No? Okay.
So that's what I really struggled with. I mean, at some stage I wanted to be a fashion designer. I think I did one of those tests. What do they call those tests?
Psychometric.
Yeah, I did those psychometric tests in high school. I think it said I should be like a nurse or firefighter, something very random. And I was like, okay, no, I'm not interested in that.
Sure.
And I remember when actually I was trying to decide what to study, that was the hardest decision. Because I said to my mom, like, this is the kind of thing I want to do. Like, what is that in a degree? And so it was like, at one point I was like, should I do a PPE? At another point I was like, should I study medicine? And then I kind of landed on business science because, you know, there was quite a broad range of topics to learn that I think I could apply to this thing that I was trying to be one day.
Okay. So you do go on to study this business science degree, finance and accounting at the University of Cape Town. Quick summation of that experience. It's 4 years of your life. I don't want to skim past 4 years of your life, of course, but were, you know, as you're now exploring these topics, learning these new things, I think it starts to frame an outlook on the world and some of the things that you're more curious or interested in and others that you're like, I can probably live without. Were there things there that were clear to you that you were saying, man, I want to fuel the fire of those a little bit more than others?
So I think UCT is probably the point in time in my life when I realized that my curiosity intersecting with business could result in impact. So being the curious person that I am, first year joined many societies, and that's actually where the idea for the Tariro Foundation was birthed. I was part of the Shoko Foundation, which is basically an on-campus volunteering program. And I tutored maths and science in Kailicha every week, and kind of, got to build a relationship with a couple of young girls and just realized just how incredibly smart they were. My mind kind of said, like, you have this group of young girls who are hardworking and smart. And when I asked them, like, what next after this, most of them said they're not going to study. They're just going to go home and maybe find a job in their community. And my mind was like, you know what, there's a gap here. Let me use this passion that I have for creating new things to bridge this gap, because we almost have like the demand and then the supply and linking that. So I think UCT, what that did for me was just, it opened up the doors, or at least it changed it kind of gave more purpose to my curiosity, and that this could actually be something that I can leverage to change other people's lives.
So just to clarify for the listeners, you founded the Tariro Foundation in 2014 whilst you were studying.
Yes.
And this is a non-profit focusing on tutoring and mentoring young girls from grade 10 to grade 12. And I think before you got there, though, and there's something that I wanted to quickly bring up, if you would. 2011, you joined the Alan Gray Orbis Foundation as a fellow. And it's actually not surprising to me, but there are a lot of amazing graduates, if you would, or folks that have come out of that program. And it's actually not something that a lot of people are too aware of. But ironically, that connection and that network, I think, has been pretty formative over the last decade for you, let alone just joining that when you'd started university. So if you don't mind, maybe just for the listeners who don't know what that is, tell us about Alan Gray Orbis, why you were curious to, amidst all of this other stuff you were doing, join this organization, and what that means at this point in your life, 2011.
Yeah. So the Alan Gray Orbis Foundation is essentially a scholarship, and Mr. Alan Gray himself, he was he worked in the financial services space many years ago during apartheid in South Africa, and basically he had a passion for uplifting Black people through entrepreneurship, and he set aside and continues to, even though he's late, continues to set aside a big portion of his wealth to do exactly that. So basically his whole theory was, there are many young Black people who have potential, entrepreneurial potential, academic potential, and we need to find those people at the earliest stage and provide them with the support that they need to ultimately realize, this passion. And that was just different thinking for me. I think, there were a lot of bursaries and scholarships, but a lot of them were sort of centered around, like, okay, cool, let's fund your education, and then you got to come into our system. Whereas his theory was like, let's invest in you, and I actually don't care if you come into the system.
Pad, right?
Yeah, exactly. Yeah, like he was just like, this is for South Africa. And yeah, I mean, that environment, actually getting goosebumps thinking about it, that environment is like, it's just so hard to describe. It's like continuously just being surrounded by people your age from all over South Africa who look like you, who are so confident, so excellent in the things they do. They're such pioneers. They're not scared of, going against the grain. And that, you kind of exist in that environment from the camp, the selection camp. If you ask a lot of fellows about selection camp, they all have a story, and no one has forgotten that. But all the way from selection camp till now, you're kind of in this very like courageous and like revolutionary environment that I think does kind of give you that belief that you can do things differently.
Sure.
And yeah, I think it's actually a good point that I think maybe people underestimate the impact that it has in being in that program.
I may have misread, but I believe you actually flew all the way to Jozi to hand in your application for the fellowship. Is that, is that correct? So, I mean, kudos to you, because it is, especially now, a highly competitive program.
Yeah.
And so, and I only bring that up so that people understand the importance of really chasing after what you're curious about. And chasing after
I got rejected the first time.
Well, there we go.
Yeah. So my brother got into the program. I saw how just incredible it was for him. Then applied, didn't get in the first time, applied again. And if you ask anyone, that application is like, I think it's like 40 pages.
Sure.
It's really long.
Sure.
And then realized that my best friend and I realized that if we sent this by post, because you had to send it by post back then, we were going to miss the deadline. So we called our parents, said, please, you need to get on the next flight to Joburg. And we handed it in physically. And
I think I really admire I don't really like the word always, but the hustle, right? It's that, doing whatever it takes to get in. So quick synopsis, 2010 to 2014, you're still studying. You've got into the Alan Gray Orbis Foundation. You've also started this nonprofit, Teriro Foundation, alongside. 2014 comes, you graduate. And for the next couple of years, you do decide to go into corporate, specifically with Investec. Was there a reason? Because clearly you're fueling curiosities across the board. I don't even know where you found capacity for all of this, of course, but practically, why Investec? Why corporate banking, if you would? And what was the thing there? What was the thinking?
So I think what I liked about Investec is that the brand was quite entrepreneurial.
Sure.
I would say that, my final interview with Stephen Kossoff was probably just felt like more of a personal chat with someone who really had that hustle and, if he tells you his story about how they started and how they get there and how they got there and just kind of feeling his authenticity, I was like, I want to be in this kind of environment where people are authentic, but also you have access to the leadership, which honestly, in my case, my last year, I spent 6 months of those with Stephen Kossoff.
Amazing.
He knew me by name. He knew my mom. So, yeah, I think that kind of sold it on me, because corporate, I don't know if I would have survived, if I'm being honest. I like a traditional corporate, whereas Investec, but yeah, has a very different culture. And I think I was, I didn't want to get into management consulting, but I was never good enough for that. I never got through the interview. So I was like, okay, take it as a sign.
Sure.
But yeah, I think that was kind of like my decision. That's kind of how I thought about my decision in starting at Investec. But I think what was still missing was the impact piece. So I felt like, the business part, I'm definitely upskilling in that area. I'm creating really great networks, but the, building something out of nothing, that part was still missing for me.
Sure. So let's talk about this. You do 3 years, initially as a CA trainee at Investec, taking up corporate finance thereafter. But after 3 years, and you can see you're maybe getting a little bit restless in that position, looking for something that's both impact and commercial, you decide to start your own business. And I love that about investors who have that experience as well, because there's a different empathy and maybe EQ for founders that some more traditional linear finance career investors may not have. So just talk me through that process, right? Because I'm sure there were opportunities within Investec, and probably if you pulled on enough strings, you might have found one. You go on to found something called Glam Alley, which is an on-demand beauty startup. And I presume you didn't have 10 years runway and all the margin in the world, right, to just try as many things as you could. So as you resolve that, great, I want to start something.
Yeah.
Why Glam Alley? Why that area? And why cold turkey, if you would? Why hard stop? Let's get into this. Maybe talk us through that process.
Yeah. I think something that really helped me back then is that I didn't really care about money that much. Honestly, I think if I did, I would have made decisions differently. I kind of saw life as like, you know, just if you zoom out, I just saw it beginning to end. And I trusted that I know I will have everything I need, like ultimately, and I probably will get to some status of wealth at some point.
Sure.
But I kind of didn't worry about, you know, curating that so much in a very particular way in the short term. So yeah, I kind of was, you know, the assessment that I did was like, I'm young, I don't have a lot of liabilities or risks. I mean, I can take a lot of risks at this point in my life. And the thing that I'm always chasing is like purpose, meaning. And if I can do that now, let me, you know, try and do that now. And I mean, yeah, I think there is probably a version of me that could have stayed in corporate longer, maybe been a little bit more calculated about the decision, like tried to build side by side, raise some capital. And then once I'd raised enough capital, step out of that environment. But I think it is in my nature to just be quite audacious. So it just felt like the right thing for me to do. And I kind of believe that, you know, if I had to go back into corporate, I think I'd probably be more sellable as someone who had the courage to leave and then come back. And yeah, I think I remember it was actually my brother lived in London at the time. And he was in Joburg, actually in the Investec office for a meeting. And I was seeing him out of Investec, and we were coming down the escalator, and I was saying to him, like, you know, I have this idea, like I really want to try this thing, and yeah, like, what do you think? And we were quite similar in the risk taking, and you know, and he's like, dude, just do it. Like, I've got your back. Like, just do it. You don't have to worry about it. Just take the leap. You know, you don't have to, like,
Amazing.
Yeah. And I remember when we got to the bottom of the escalator, I was like, okay, cool, I'm doing it. And then, a few weeks later, I sent in my resignation. But yeah, I think, you know, that played a big role, my family support in that whole process. So, yeah.
Talk to us about that opportunity in particular. Because it's certainly not in finance or corporate finance. If anything, it really is a tech startup. And so you're building this on-demand platform for beauty services. Where was the opportunity there that you saw? I assume that you weren't as learned as you now are, having sat on the VC side of the table and known what to look for and metrics and all those sorts of things.
Yeah.
Talk to us about what it's like to build your first tech business in that space, and why you thought you wanted to dive into that opportunity.
Yeah, so sorry, just on the previous point, I think another significant factor in kind of like my courage to take the risk was that I knew that I had a support system in Alan Gray as well. So the Alan Gray Foundation actually has a program for fellows to come back and start businesses. Amazing. And they provide, I guess would be considered angel investment at the time. So I knew that I kind of had that, and that's a big part of it. Sure. But yeah, I think the experience came, I'm not like I don't want to say diva, but I don't do face beats and like the likes. I just kind of like do the basic stuff like hair, nails, etc. But actually working in corporate finance for like a year and a half at the time, I really kind of struggled to just go get my nails done or get my hair done. And through that process, I started meeting freelance beauticians who would come to my house maybe much earlier than like, let's say 9 a.m. on a specific day. And I thought, you know, I started speaking to them and built a really good relationship with a couple of them, and started realizing that, you know, there are probably a lot more women in corporate who have way more responsibilities than I did. They have kids, they have, you know, other things outside of work, family that they need to take care of. And that then you also had this group of freelancers who, you know, maybe had jobs at Sorbet or other salons, but then also had all this free capacity outside of their days at work. And that's where the idea came about.
Interesting.
Yeah.
Okay. And so this is a marketplace.
It's a marketplace,
right? It's a
basically.
marketplace. And so talk to me about building tech. Talk to me about seeding capital, buying enough runway. Talk to me about that founder experience, if you would.
Yeah. So I think on the tech side, what was really cool was the founders I spoke to really early on, because I was like, oh my God, I need to find a CTO. I need to find a tech co-founder. They were like, dude, just do this very rough way. You're trying to create a platform where you can market services and then track, execute on those services. So like the platform itself was made up of many existing free platforms. Sure. So not kind of like proprietary code or anything complicated like that. And it worked. I think that's why I could set it up in a couple of days. And yeah, I think that the validation for me was kind of like having as soon as people that I didn't know started using the platform, I freaked out, but I was also like, okay, this is cool. Like, yes. People actually care, and made a lot of mistakes, in that process. Building a marketplace platform, I think is really tough, in that you almost have like 3 customers, sure. or like 2 customers actually. You have the service providers, and then you have the people paying for the services, and you almost have to manage that user experience each and every single time, which I realized I wasn't the best at, but got better over time. Of course. But yeah, I really enjoyed the process of, building that business, getting it to a point where it was something that people felt was worth paying for. What I found quite challenging was probably being a single founder. Like there, wasn't really anyone to share that responsibility with. So after a couple of years, it got very, very exhausting.
Sure.
Yeah.
Yeah, sure. And thanks for sharing that. I think the reason I pry, if you would, is there's going to be a lot of listeners who themselves are in corporate, who are thinking about starting their own business, thinking about using technology as the vehicle. And I think there is this misunderstanding that you need to have the full tech stack built and loads of capital run. Like, there are other ways to do this. And even from your perspective, just sharing small lessons like being a solo founder and some of the realities of that. People, for some bizarre reason, think they need to reinvent that wheel every time they found a business. Yeah. And so they've got to learn those lessons themselves. To the listeners today, you don't. Yeah. Please rather take those lessons from those who've gone before. Thanks for listening. We're going to take a quick break. I'm Mathew Marsden, and this is the Startup Club podcast. Today's episode is brought to you by Aeon's Creative Technology, the new generation South African venture builder created by former Ozo co-founder and respected tech entrepreneur Mitchin Adams. Now, Aeon's is not an incubator or traditional VC. Rather, they identify, support, and co-invest in innovative startups who can grow aggressively and create sustainable jobs. They also partner with corporates to source and accelerate startups to fill respective gaps in the corporate's value and supply chains, securing 58 million Rand from Telkom Future Makers earlier this year to do exactly that. And to top it all off, Aeons has created a pioneering platform known as the Aeons Exchange, enabling everyday South Africans to invest in high-growth ventures that are supported by their programs. Visit Aeons, that's AIONS.co.za to learn more. Thandeka, you had joined Alan Gray as a fellow in residence in that process, and I think you were part receiving and also giving back to the new fellows coming in. So again, that's better part of a decade that you've been involved in that. But just talking about, as you're running Glam Alley, 2019, really this opportunity comes up to start a venture fund of all things. Now, you as a founder would be very aware of the lack of funding, particularly in the pre-seed stage. And then even if you are fortuitous enough to receive kind of pre-seed angel funding, there's this massive gap in the seed stage. So you would have certainly been on the receiving end of that, having done several pitches yourself and things of that nature, trying to raise capital. Talk to me about how you go from running this business and figuring that out and doing it alone to finding yourself running or thinking about setting up a venture capital fund of your own. And of course, you go on to found this in 2019. So it's pretty short turnaround time for all of these things to happen. Maybe walk us through the the first days of Digital Africa Ventures?
Yeah. So, so I think firstly, it was not part of my plan. I remember when we actually launched DAV, or when I got the opportunity to be involved in DAV, I messaged my mom and I was like, Mom, remember that essay I sent you a couple of years ago about, my long-term vision in life and what I want to do? And she's like, yeah, I remember that. And I was like, I'm telling her about like this conversation I've had with the SSME fund or Anchor Investors about, doing a similar thing. And she was like, that's crazy. I didn't know it was called venture capital. I didn't know what form it would take, but I guess it somehow came together.
And talk to us just about that conversation that came up, because I assume you were running this business, you were running Glam Alley still, and then all of a sudden you had a conversation with South African SME Fund. For those who don't know, probably the biggest fund of funds in the venture capital space in South Africa, that was launched kind of 2019, 2020. How do you get on their radar? How did they get on your radar? Where does that conversation start?
Yeah, so interestingly enough, I was pitching at an Alan Gray event. Sure. Alan Gray putting me on again.
Yes.
And one of the panelists on that pitching competition worked at the SSME Fund. I also knew her before, but more socially, actually.
Sure.
So after the pitch, she was like, I know this is not really what you're trying to do, but, we're trying to launch a couple of new funds at the SSME Fund because the private equity and venture capital industry is not diverse at all. And we're really trying to fix that. So in my mind, I was like, okay, I don't really know what that means, but, let me just meet the team and see what they're trying to do. At that point in time, they'd already identified a couple of individuals for this specific fund, and they were just kind of having conversations with us all. When I had my first meeting with them, none of the questions, I think there was one question about VC. Sure. The rest was about, similar to this conversation, my upbringing and, Teriro Foundation. And I was kind of like, wait, is this a VC fund? Like, what are we talking about? Yes. I think ultimately, when they came to the decision that they'd like me to be a part of the fund, I was a little bit like, do you guys realize I'm 27 years old, right? That's a huge, it doesn't seem right to me. So a lot of imposter syndrome coming in, and I think rightfully so. I mean, now that I've done the job for 3 years, I kind of have a much better understanding of what it takes. But I think that I admire the SSME funds, just audacity, I guess, similar to how I am in doing something that probably was never going to be done if it wasn't for them. Sure. And obviously came with its risks. And it's just like, it's very clear to me that if Ketso hadn't, put himself out there in that way, we wouldn't be around. And many other funds actually that are, part of our ecosystem wouldn't be around. But then, part of me also, felt like actually it's quite helpful that I've started a couple of businesses before. I can relate to founders. I've literally done the same thing in a previous life. And, the opportunity to have that level of impact where I was a founder trying to raise and literally felt I had nowhere to go at the point in time. And then having the opportunity to step into that gap myself just felt like, this is definitely something I want to get behind.
Amazing privilege, right? You co-found DAV for short with Nonku Komanyane, also a powerhouse, and people have, I think anyone who's met the both of you is probably saying, man, these two are proper rock stars and kind of pioneering in the space. Did you know her before that? Was it someone you brought into the fray? Was she having convos with SSME Fund? How did you guys found this together?
Yeah, so she was having conversations with the SSME Fund separately from me. Okay. And then they basically connected us. But when we met each other, we were like, no, man, I know you. But socially, definitely not at kind of, we'd built something together before.
Sure.
sense. Yeah.
And tell me, because we've actually had a couple of guests on the show that have founded businesses with, strangers, actually. The pineapple story recently, a bunch of co-founders who didn't even know each other come together to found a significant insurtech. So in this case, you might have known Nonku socially. Does that bring some interesting dynamics you need to navigate as well, having not worked together? I mean, how easy was the fit? And just almost inheriting a team, if you would, right?
Yeah.
Is that easier or harder, or does it actually bring a lot more pros?
Sure. Good question. I think it definitely requires a level of maturity from everyone around the table.
Sure.
For people who know you, I think it's easier for them to, understand how you work, how you make decisions. But I think with Nonku and I think the thing that we've done really well over the years is that we've had really great empathy towards one another. And we've really, to the best of our ability, been on each other's side over the past couple of years. But it's definitely not as, I think it's perhaps easier starting a business with someone that you know.
Sure.
But I think we kind of like opposites in a sense, and we complement each other quite well from a personality standpoint. So I've always valued that, like having her, and we're quite different. And I think, what she brings is very different from what I bring.
Brilliant.
And maybe that's luck, but it worked out in the end.
No, it's great perspective, right? Because it's incredibly difficult to raise a fund ordinarily. It's even more difficult to raise it as a solo fund manager. So to have those dynamics and to have the empathy for one another at play, it's all about LPs willing to trust you, right?
Yeah.
So I think you've definitely come off on the fortunate end of that, which is amazing. Quickly tell me, so the SASME fund brings the both of you in. Guys, we want to launch this fund. We'd love you to run it. They're willing to seed some capital, presumably, into the fund. Did you raise additional capital? Was that sufficient from them alone, having a single LP?
We raised additional capital, but not from an LP, so more working capital facility. Was it sufficient? Probably not.
Lessons learned,
but
right?
we hustled our way through. And now we got to manage that portfolio after having deployed it. And I mean, in retrospect, one of the biggest takeaways from me was just like how much value, the amount of value that you can add to the invested companies is directly proportional to your capacity, which in VC is directly proportional to the size of your fund.
Absolutely.
So, I mean, I think for how small we were, I'm actually really impressed.
Sure.
We have some of our portfolio companies tell us like, dude, you add more value than, other funds on our cap table. And in my mind, I'm like, we're the smallest, we obviously just, trying.
Sure.
There's no way we're like doing better than some of these other guys. And people like, no, like for sure, like I would definitely put you in like my top 2 or top 3. And I mean, I don't know. I think maybe it's because we care a lot, but I think everyone cares. I don't know why it is.
Sure.
But it's encouraging in the sense that like I know that it means we have the capacity to do so much more, which we do. There's so much that we want to do. There's so much more areas where we think we can add value. But it just did. The lesson is like you need people. You need more people. You need capacity, and that comes with money. So, inshallah, fun too.
Tell me about the ability to attract decent investees, because you are a new fund. Of course, there is a gap. For those who aren't aware, there is a gap in the South African pre-seed seed space. And so raising capital is really hard, specifically if those are one of your first rounds. Was the DAV proposition, was it received well by the founder ecosystem? Were folks readily engaging? Were they just so desperate for capital that you probably had more opportunities than you wanted? And maybe just talk to me, because you've attracted, and just for our audience, you've invested in some really reputable companies for a first fund: Triplo, Kandua, Flex Club, Tunnel. Talk to us about the ability to convince also those founders to let you come on the cap table. I think you've already alluded to that a little.
Yeah, so I mean, I think one of the things that immediately set us apart is that we said we want majority of our fund to be invested in Black founders. That's just a huge gap in the market. If you are part of that network, if you're part of that community, it's like you have access to that deal flow.
Sure.
And so that kind of helped us, and if you look at our portfolio, majority of our portfolio companies are founded by people of color.
Sure.
But then again, you had the very, sexy portfolio companies where we were like, oh my God, we just so badly want to get on this cap table. And for those, it's competitive. And I think it keeps on getting competitive. We tried a couple of things. I think we built really good relationships with other VC funds who would then kind of, give us access to some deals that were live and ongoing. I guess, it's a bit of both. I think for us, we were like, we see a gap in the market and our thesis was proven correct through this fund. But then again, when it comes to the very kind of like competitive deals, it's competitive. You have to bring something more than capital.
Absolutely.
And I think that's the right approach from founders, definitely. I think the supply and demand dynamics in South Africa are not yet at the point where I think founders have enough leverage.
Sure.
And I think that definitely should change because VC funds, we also need to be competitive in kind of gaining access to those rounds.
Talk to me about, because you've mentioned you fully deployed Fund 1, you've got some very exciting prospects with Fund 2, I think, in the pipeline. If you had to take away as a first-time fund manager some key lessons, things you would hard not do again or things you have to avoid, what would some of those be? Because we're going to have loads of current VCs, prospective VCs, even founders who might be able to just gain from that insight. Thandeka, anything that comes to mind just from the first fund?
Yeah, there are so many, probably like 12.
Yes.
I think for me, like in recent times, the thing that I've probably valued more is less so much like, how many deals have you done or which cap tables are you on, but investing in getting to know founders very early in their journey. That's something that I'm really passionate about. And, without necessarily even being like, oh, it's because I want to invest in your company. I think just so much good comes from being a good steward in the ecosystem.
Sure.
And I think in our first fund, there was a lot of pressure. We're learning, we're having to learn a lot of new things at the same time. And while doing that, invest in great companies. So it felt really fast if I think about it. And I think, something that I would have that I wish I did more of was build relationships along the way, especially in, with the founders in the founder community.
Sure. Good wisdom.
Yeah. And I think time plays a role in that as well.
Absolutely, right.
And then, and I think part of that is also doing that in not necessarily like structured ways, like, these events and conferences, etc. But I think, if you look at Will Green, I'm pretty sure you follow him on LinkedIn, but he's hiking up Table Mountain with some founders, like things like that.
Sure.
We have to bridge this gap of like investor, investee, and we have to kind of see each other as people in a partnership to create value and impact. And that's something that, I'm really kind of, trying to get a lot better at. I think the second thing, which is probably more, I don't want to say technical, administrative, but thinking about fundraising, it's kind of very easy to like have a list and be like, okay, cool, these are the people who can invest in my fund. This is what I need to have ready when they're interested in me. But I think looking back, all of, funds revolve around deep beliefs about the future. So as a manager, you hold a very deep belief that's evolving here and there over time, but you have this thing that you're saying, like
strong conviction.
Exactly, strong conviction. Yeah. And so I think when it comes to raising, it's less about like, oh, let me pitch this LP at this point in time, but it's more about people to get to know you and what you stand for. And what I'm realizing is that the relationships that I've invested in over time, those are actually the people who are coming back and saying like, hey, I actually believe in this thing that you're always talking about and that you stand for. And I think the ultimate raising conditions are ones where you've cultivated this environment around you where people buy into what you do.
Sure.
And that's a very deep investment.
And they can trust you.
And right? They can trust you, yeah.
And just for the context of our listeners, an LP or a limited partner are the folks willing to invest in the fund, the people to whom you are ultimately accountable to return on that capital. But you are a steward of their finance until you do.
Yeah.
And so they have to have deep conviction in the thesis of the fund, in you as a fund manager. And so just some additional context for anyone listening who's not privy maybe to the venture capital. T's and C's, if you would.
Yeah.
Thandeka, it's crazy to think that you're barely 30, man. And this seems to be a lot that's happened in a very short space of time. And long may it continue. But you're working on Fund 2. And I just want to chat very briefly about that. You've alluded to the fact that now you're in conversations about raising the second fund.
Yeah.
Obviously, the first fund, a slight anomaly, in the sense that you almost have an anchor investor coming to you to set up a fund, which almost never happens anywhere in the world.
Yeah.
But you take the win, right?
Yeah.
Okay, great. What an amazing platform to build off of. Talk us about Fund 2. What's it been like now that you've got a little bit of track record? Again, most VCs are so new, they haven't seen a full cycle. They haven't necessarily returned on capital deployed. So even though you've made some investments, you, like many VCs, are early. Has it helped now to have a little bit of pedigree, a little bit of experience in the space? Maybe talk to us about what it's been like trying to raise the second fund.
Yeah. So it definitely helps. I mean, we were having conversations in our first year of DAB with potential investors that, 3 years later, I'm like, why did we even have it? Why did we even speak to those people? Because we had nothing to show for what we were trying to do. So it definitely does help. I think what also happens in that is you have wins and losses. So, we've had to become really good at owning our mistakes because we are bound 100% to make mistakes, whether it's a startup or a VC fund, but then also get better at talking about our successes.
Sure.
Whereas we're like a team of people, we're just like, cool, yeah, that's great. And then we keep it moving and people are like, wait, did you guys really? And we're like, oh yeah, we did that.
You're building a story, an investable story, right?
Exactly. Yeah. So it's gone a long way. I think, just going back to the lessons, one of the other things for me has just that is, I guess a lesson is just how important it is to be surrounded by some of the best people doing what you do. So I think that we've been really lucky to have some mentors and advisors who are walking the road with us for a really long time. Like, people don't know, people don't see, they're not out there saying like, I helped DAV, but there are a lot of people who are selflessly giving back to the ecosystem by investing in emerging managers like us. And I think, the sooner, even if you're a founder, if you can find someone like that who just has a heart for like investing in the next generation of entrepreneurs or fund managers, definitely prioritize doing
Amazing.
that. Yeah. And that's also helping in our raise. It's just having that, best practice institutional knowledge that's kind of guiding us along the way.
Sure. It's a hard time to be raising a fund. It's always a hard time to be raising a fund. So for the founders who can't empathize with the investors who have to go out and raise a fund as well, they really do understand fundraising as well. Talk to us about, just very quickly, in this market, you've now got some pedigree, you've got some oversight, you've got some good mentorship. in principle, well positioned to raise a second fund. So talk to us about maybe just some of the challenges of raising that fund right now, and also what's going to be different, or is it doubling down on the same thesis as Fund 1?
Yeah. So, yeah, I think it is definitely, just looking at the macros, a difficult time to be raising capital in general. I think what's just so interesting about like trends in society, something that's happening now that's really interesting is that you have investors saying like, hey, we've been ignoring female fund managers for the longest time. So you have so many gender lens funds, well, not so many, but you have way more than you did 3 years ago coming up and saying like, we need to seed female fund managers. We need to invest in female fund managers. You also have a lot of international investors looking to deploy capital on the continent because of the influence that Africa is having globally, but culturally. So if you look at music, if you look at fashion, people are becoming a lot more interested in Africa, South Africa, and wanting, closer ties to the continent, especially diaspora. And so you have those pockets of capital that are saying like, oh, hey, I actually want to, invest some time and capital into understanding this ecosystem. So it's very interesting because 3 years ago, that was just not a thing. Yeah. And now, like in the worst time, you have these very niche investors who are actually looking for managers who look like me, which is crazy, but very helpful.
Sure.
And then in terms of the contrast, so, we still believe that there's, an upcoming generation of founders who would have, gotten the degree, have the experience and the know-how. They're going to be taking advantage of the technological revolution in Africa, building very exciting businesses, getting into accelerators, but then when they get to the seed stage, there's still going to be that funding gap.
Yeah.
And, that exists in South Africa in very specific ways. But when we kind of looked at it across the continent more broadly, we realized that there actually are these pockets of, we call them underrepresented founders across the continent. So our thesis is similar to South Africa.
Sure.
Still at the seed stage, because that's what we know, that's what we've done before, and but looking more broadly across the continent.
Amazing. And I think if you are a founder, underrepresented or not, on the continent building exciting things, and by the sounds of it, Thandeka is going to be very keen to chat to you. So definitely take note. Fund is not raised yet, so please bear that in mind, but some exciting prospects. Thandeka, we've got a couple of seconds left, and I just want we end every show by bringing it back around to the founder, the investor themselves, and to ask a question that might seem a little bit out of left field, but it really ties back to what this is all about, right? So the question is very simply, what does success look like for Thandeka? In 50 years, we're all going to be old people sitting on a stoep, or, maybe one day you on a Caribbean island and you happen to own that island. Who knows, right? What does success actually look like for you if you had to look back on all of this and go, man, I did this well?
Yeah, I think for me, it's, have I played a meaningful role in providing or recognizing potential and then providing some sort of a way for that potential to actualize or realize. I just think that the world is it's not equal, and, big part of it for me is like, I think if people are talented and they have everything, I want to kind of play that role of being a bridge for people to realize that potential.
I think short, sweet, but remarkably profound. So certainly not understated. Ladies and gentlemen, that is Thandeka Xaba. We are incredibly privileged to have you on the show today. Thank you so much for being with us.
Thank you.
And we look forward to following you immensely closely.
Thanks.
Speak soon. Thanks for listening to today's episode. That was Thandeka Xaba, co-founder of Digital Africa Ventures. I'm Mathew Marsden, and if you enjoyed today's episode, please be sure to subscribe to our channel, follow us on our socials, and share with your network. See you next time.